take that as a one-off.
Okay, so this is of course the verdict for TCS. Remember, and I'll just scratch that point a bit further with Ravi as well as Urmil, and Rahul Jain also would be joining in. But this is the earnings verdict that we have for TCS. Keep in mind it's a mixed quarter, and which is why the yellow on the screen. They've given a positive surprise on the numbers, on the bottom line and the margins, but the revenue has been a miss. So Ravi, we have to let you go, but before that, very quickly, what is your verdict then? Do you believe that tomorrow you would be telling your clients to go out and buy if there is a bit of a disappointment on the TCS stock price?
I think I might, actually.
Okay.
Because, it depends on the commentary about the outlook. But if I would say that the commentary is not negative, I would actually say that this is an opportunity, if there is a dip, to buy into it.
Rahul Jain of Systematics with us. Rahul, what is your thought on this? Because, I was of the opinion that the revenue miss is difficult to digest, considering this is the slowest Q2 that TCS has had in a really long time, as Sunita was saying. Ravi Menon believes that they've done well in the key geographies, and the market would probably instead look at the bottom line positive surprise that has come in. Where are you on this argument?
Yes, so actually TCS is our preferred bet, which has been kind of a little different from the street, but we always believe in the broad-based growth which TCS done. Even if you see this quarter, the disappointment has come from very small fraction. From geography, it is Latin America, which has been challenged for some time, India, which nobody cares about much in terms of the growth. If you see from a service perspective, it is the product business which is volatile in nature. So I think it's okay. Yes, it says second quarter is seen as a good quarter and is one of the slowest one. But yes, that's the case for this year itself. This year we are going to see one of the slowest growth for the industry in general. So obviously there would be a slower 2Q, a slower 3Q, that is a possibility. But I would say this number is little lower on the revenue front on my estimate. But on profit, yes, it has given an upside, and I think given the valuation which it is trading right now, it looks to be a good buy for me.
Okay, so good buy for two of our experts, and Ravi, we'll let you go, of course, on that note. Thanks so much for being with us. Now, to Urmil and Mayuresh, both of you, my second question is, we just read out what Chandra had to say, and he's saying that the environment is causing a lot of customers to go slow on their decisions. Mayuresh, the big question is, while Ravi and Rahul are saying that it is their top idea and they look at the bottom line number, does TCS, by virtue of what they've done in the first 2 quarters and the fact that the second half is a bit uncertain, will TCS be able to reach what the NASSCOM believes an average IT company will do in this year on the revenue front?
Well, that's what I mentioned, Neeraj, that the headwinds are there specifically in terms of how discretionary spending will pan out. And looking at how Brexit will evolve over the next few quarters, that will always remain a patchy situation for top-tier IT companies. Having said that, probably, I think what you've probably seen in terms of numbers, what really needs to understand, as I mentioned earlier, a line-by-line synopsis of how the bottom line has been arrived at. And if the management commentary is hinting that post a few quarters and traditionally second half is weak, beyond that they are seeing some amount of traction happening on all counts, whether that be their service lines or their various geographies. I think that is something that the market will take some relief out of. So my own sense is that everything now points out how the management commentary is. If the management commentary appears or sounds a little bit sluggish in terms of how revenues are expected to pan out, you might have some downgrades, in my opinion, at least in terms of the earnings specifically for FY18. So largely, I think I will be waiting for management commentary in great detail, hearing bit by bit every word that Chandra has to say, and then probably we take a call on this.
Yeah, I think what he says and how he says, the body language would be important as well this time around. And remember, Chandra will be speaking live first to ET now this evening, so that is something that viewers can tune in as well. Now, Urmil, your first comment was a miss. You've just heard a couple of other arguments as well. Is the margin surprise and thereby maybe the bottom line uptick? I haven't gone into the details. Maybe there are other factors contributing to the bottom line. But let's for a moment assume that the margin uptick has given that little bit of a leeway to TCS to up its bottom line. Is that good enough to make up for the disappointment on the revenue front for this quarter? I'm not talking about the next 2 quarters. Let's assume his commentary is all okay. Will this delivery disappoint you, or will you be okay with it?
So for this quarter, on the we believe that revenue growth is what is the main factor for the sector as a whole in this particular year. There is absolutely no doubt that TCS has the best track record as regards managing the margins. So they have been doing the best job amongst the large caps. So margin performance is definitely better than expected. But even if the decline is mainly driven by India in this quarter, I would say that 1 percentage point growth in CC terms is a miss for us.
We were expecting 2.5 and they've come in at 1, which I don't know, is a disappointment. Now, Sunita probably tracks TCS for longer than any of us out here. Sunita, to your mind, how do you think the street reads into these numbers? Because there is clear cut revenue disappointment. Does this, Sunita, the same question to you, does this also put a question mark on their ability to be able to meet the NASSCOM guidance as for an average IT company for this fiscal?
Absolutely, the revenue growth is much lower than expectation, so it clearly puts the pressure for them to do better in the second half. But having said that, margins was another thing that markets were focused very, very much, especially that their guidance of 26 to 28%. So for this quarter, they have been able to meet that 26%, although Q1 it was lower than this thing. So there is a possibility that they will be able to defend this guidance range of 26 to 28% in the medium term. Most of the analysts were going with that for FY17. This will be missed. So that is clearly a better performance on the margin front. Net profit also, we were expecting a very flattish kind of net profit. They have done better. They grown at 4%. So that has also come as a positive surprise. Of course, there is a disappointment. But having said that, as you heard various analysts talking about it, and they said that it's coming from geographies like India and Latin America, which has been in past also have been unpredictable markets. So these are the two markets which are not that material. If you look at the Europe has been flattish in this quarter. Previous quarter we have seen Europe done very, very well for them. So because of the Brexit uncertainty, maybe there are discretionary spend being held. So that's what is playing out as far as BFSI space is concerned. They had said that it will be sluggish, and that's exactly how it panned out. But if we have to hear the management commentary, the comments that the company has given in the press release, they are talking about this is an unusual Q2, and if they say that in the coming quarters they are expecting demand to come back, or the bunching of demand post event like a US president election, so we can see some improvement and stock opening higher tomorrow, because there is a positive element in the numbers, although there is a disappointment on the top line front.
Okay, so the EBIT, not the EBITDA, but the EBIT margins are at 26. The EBIT is at 7617 versus 7347, not the EBITDA, but the EBIT numbers are therefore, I think by and large in line with estimates, the EBIT numbers. The EBIT margin though, of course, by virtue of the fact that the top line hasn't grown as much, is now at 26%, and Sunita is right, there's a positive element on that front. Now, having said that, Rahul, my question to you is this. TCS standalone, assuming that you go with the assumption that the profit number is good and therefore it's a great stock to look at. Let's compare it with the others, right? Infosys has had a bit of a devaluation. I mean, forget the last couple of days when it has rallied in anticipation of maybe a positive surprise coming in tomorrow. It is HCL Tech which is saying that they will easily match the 12% number, probably better it as well. What would the pecking order be? Would TCS still be the preferred bet, or looking at this quarter's delivery on the revenue front, you will probably move the pecking order up and down a bit?
Yeah, I think given that growth rate has come off in the sector, and the growth differential between the best performing company, the top 2, top 3 there is a very micro difference between a barely gap of 200-300 bips, and there is a margin movement up or down in the respective stock. So I think to look one result in isolation becomes a little difficult to decide the pecking order, and there is cases of some surprises that may come. Today we saw Cyient earnings did pretty well, much better than most of the expectations. So there are element of surprise or disappointment that can come given the volatility in the environment, and so we would look into all the earnings before decided pecking order. But yes, so far we are okay with the TCS number, and ensure that it remains one of our preferred bet for sure.
Okay, fair call. And that's probably a safe call as well to make. Now, Mayuresh and Urmil, that's my question to you guys as well. Mayuresh, where are you when it comes to the IT pecking order? I know one swallow doesn't make a summer, but the point being, right now we've gotten the first of the numbers, which is TCS. So there is Infosys slated to come out tomorrow. We can safely bet that HCL Tech will not have too many issues because they've delivered such a splendid Q1 that they need to do precious little in the next few quarters in order to make up that number that they've guided to. Where are you on the pecking order and why?
Again, I think the long-term story is very, very compelling for the top-tier IT names, Infosys, HCL Tech included. And again, I think the kind of expectations that one really has for the better part of this year is extremely subdued for all top-tier IT companies. So largely, I think it is going to be a performance beyond FY17. And the last 2 quarters, Neeraj, is going to actually throw out, if Brexit does throw out surprises coming out in terms of spending cuts coming from the client side. And if that happens, I think the entire equation changes in terms of EPSs for most of these companies for FY18. So though the near-term outlook probably is marred with macroeconomic headwinds largely getting faced by these IT companies, Infosys and HCL Tech over the longer period should deliver. TCS obviously has delivered on the EBIT and the bottom line, so I think I would love to see where that delivery has come from in greater detail. But largely, yes, I think we remain optimistic on the large cap IT names. But again, I think the view has to be at least for a couple of years, considering the macroeconomic situation that we are at this point.
Urmil, aside of needing to know very closely what Chandra has to say with regards to the revenue targets for the year and whether he believes that that will come in at a nice clip or whether there will be headwinds there, what else assumes larger significance? They've, as Sunita was saying, managed to nudge the lower end of the guidance of 26 to 28%. So that's a green tick on that front. But what else aside of the revenue numbers would you want to hear out from when it comes to the commentary coming in from Chandra?
So we would like to hear out what are the clients talking to them regarding the IT budgets and the spend for this year. And also if we look at the digital services growth in this quarter, it's probably been the slowest in the last 4-6 quarters as well. So we would like to understand that front also. And BFSI continues to be the biggest segment for TCS and has been an important vertical for them for the growth that they have delivered in many previous years. So would also want to understand whether the kind of caution their clients are showing, it's specific only for this particular year, or even it looks uncertain beyond that. So these are the key points which we would like to get more clarity on the con call.
Okay, Rahul, the other question is this whole talk, and I think Sunita was referring to her this on before in the morning today about how companies are, or at least in candid conversations, they are saying that automation, while may lead to margin expansion, could lead to a near-term revenue loss coming in. Are you seeing evidence of that across the space in the last couple of quarters in commentary and in delivery?
Yeah, so automation in various clients leads to revenue reduction of anywhere between 10 to 30%. Now even people talk of more automation than that. But yes, as like for any other business,